Let's kick off with Peter McGuire, CEO of XM Australia. Peter, just to give a setup for you, the World Bank sees global growth declining again next year, but Asian GDP on an average still above 4%. Anywhere else in the world, that's great. Why is that not great in Asia? Your thoughts on the wider macro outlook for Asia in this year ahead?
Well, good morning, Sean, and greetings from Sydney to everyone, and thank you for the invite. A couple of things on that, and there's no doubt, yes, 4% is a healthy number when you're looking at the big picture, and you'd say, well, wow, if we're going to have 4% in Australia or 4% in the UK, for instance, or Eurozone. The issue is that they export a lot of it from an internal demand picture that is very, very different to an export-driven model. An export-driven model needs consumers, and this is the issue. So we need to internalize all of those growth structures into that energy of Asia, which may happen. I mean, when you're looking at what's going on as far as oil consumption, you're looking at the overall themes. I don't like where if I look at the stock market as an indicator, because we're down from 4,200 to 3,200 in that 1 year window for the CSI 300 out of China. So that's telling me something, Sean. That's telling me that it was either overcooked to the upside, which you would have to say it was, and it's being spanked down heavily, and it just continues to fall. While you've got strong growth across Japan at 33-year highs for the Nikkei, which is quite extraordinary. So where is it? Well, I've got to say...
What explains that difference? I mean, the Nikkei, is that a weak yen story, or what's giving us this bionic move in Japan, sort of an outlier, if you like, to the giant that is China?
Well, I think first off, you were sold so heavily off in 89. You went from 39,000 points for the Nikkei all the way down to a low of 8,000. Now it's had a tremendous move up. We're up 300%, 400%. But the reality of the matter is it was so heavily sold off. Are we going to go through a similar phase and see China in some ways? I'm not suggesting copying Japan, but is it going to have further downdrafts in 24, continual downdraft as far as equity markets, comparing itself to the powerhouses, say Japan? Consumption, Sean, we've got 90 million apartments and houses overhang as far as the property sector. It's fully cooked up as far as property. So
in China, we're saying 90 million unoccupied apartments in China.
Yes, and homes. So that's the iron ore story, and we're dependent upon that from an Australian mindset, exporting and coal and so on, everything into China. A lot of that's already been taken on board and used and utilized to construct these properties, but it comes down to the debt issue as far as who's holding the debt. So I look at China and I say, I think it's ticking along reasonably okay, but it hasn't come out of the blocks post-COVID like really in some ways the US has, and certainly their stock market has been very, very hammered.
Peter, taking the view that there's a growing narrative of peak China. We come out of the COVID period in 2023. There's a lot of this time last year was the year of two halves. China's going to come roaring back in the second half. We start 2024 with the sort of the penny dropping, the dawning realization, perhaps, that we have reached peak China. That's being advocated by the Eurasia Group. All the different data points you want to point at would indicate they're in a retreating posture, whether it be the Chinese labor force has become too expensive, the more larger questions of water stress, demographics, the supply chain moving away from China. Even geopolitically, we're seeing the Philippines and other nations ramp up their military architecture to counter the robust geopolitical posture of China. Your thoughts on that thesis for 2024, that the penny finally is dropping of peak China? Do you advocate, do you support that narrative? If indeed it's true, what does that mean?
Well, Sean, another part of that you have to look at comparing itself to Asia and primarily India is an old population in the sense of a demographic that is an aged older, much, much older than versus someone that coming out of India, whereas the average age is significantly lower. And this is across pretty much the Asian footprint. So China, with that one-child policy, we all understand that now, you pay a price, and the price you pay is normally around about 2025. That's when I went to business school. They said that's really going to impact as far as growth numbers moving forward. This is 2 decades ago. I remember at Wharton, we studied it intensely because they were worried about it. And now it's on your doorstep. So where do they move forward? It's going to be very tough. You've got, and the civil unrest, and of course, how do you keep employment for such a large component of 18-year-olds that come out of school each year? Where are they working? What are they doing? And all of these sort of factors that go into trying to keep 1.4 billion people relatively satisfied and without causing too many dramas, Sean, across the fabric of what China is. So yes, I think that they've got their hands full. I think.
I mean, that's a major point. If indeed we do think of peak China, and particularly in the area of sort of the manufacturing industrial economy, that's a massive for Australia. I mean, you dig up everything out of the ground and send it there. What are you going to do with all that iron ore, all that coal, all that everything?
Well, it's got to go somewhere else. Someone else in Asia will probably, as far as the consumption chain's concerned, you look at the linkages and you see, can it be produced somewhere cheaper? And is that cheaper going to be possibly Indonesia? Or is the labor component of, the Philippines going to be more receptive versus China? These are the conditions that anyone has to look at. And I'm not sure how Australia tackles that. That's another argument altogether, because we've built our whole country on exporting to China. So, I think that there are many moving parts to all of this, the fabric of the chain that need to be, they'll unravel in their own way over the next matter of years.
Peter, I mean, 2024 starts to feel like it's, the year in which, to pick up on that point that Ram makes, that it's the year in which one says, oh, this Russian oil isn't a temporary thing. It's now a semi-permanent presence here, just like the US oil. Does that change the dynamics? We saw stress in OPEC Plus at the end of last year. Saudi and Russia seem to be finding some, elbow problems there. Saudi still sort of trying to manage a market to see a higher price. Russia looking to produce and export as much as they can. Your thoughts on the sort of Russia becoming permanent actors in Asian oil markets and the Gulf Arabs sort of coming to terms with that? What does that look like to you?
Well, I think, Sean, that naturally they've got to expand, like any producer. You've got to expand your customer base. And as far as your balance sheet internally.
But if China's declining, how do you do that?
Well, you've got to look at other markets. You've got to take on board, and you've got, as Ram said, you've got that huge growth coming out of Indonesia, consumption there, 220 million. And the other side of that, of course, is that it's a large, expansive nation with many islands. So that takes ferries, it takes more consumption as far as crude oil and energy and diesel and distillates to get that to transport goods. Second part, of course, is, yes, I think Russia, they're really starting to, under Putin, the mechanism of, they're not sitting on their hands here. They want to build up, and they're 24. They've got the ongoing situation in Ukraine that seems to not gain that much attention anymore, but that's certainly something for them to think about. And the overall thoughts as far as how that economy survives in 24. You've got relatively weak base metal prices compared to where they've been historically from an export model. So they've got to see how they can compete in these sort of environments with energy prices in the 70s and 75s is not where Putin wants to be. They want higher prices, and they'll probably push a lot harder through the BRICS and, of course, being alternative currencies for payment, Sean, Bitcoin, gold, and so on.
On that point, Peter, just looking at currencies through 2024, we had a strong dollar narrative in 2023, which sort of eased off towards the end of the fourth quarter and so forth. What do you think? And obviously, a strong dollar has real consequences for consumers in Asia buying all these commodities, oil in particular. What's your outlook currency-wise for that repeating, or will it be a soft dollar year?
Well, remember that there was a couple of things on that, Sean. The last 2 months of the year, well, if you roll it back 3 months, the fear of missing out was the equity markets, and it was just off to the races. November and December, extraordinary growth, and that fear of missing out. A couple of things throw into that. First off, the tax year, you don't want to be selling because you'd have to pay capital gains come April. So you wait till the new year, and that seems to put that away. Remember, you had the Israeli situation in Palestine, 7th of October, and we had the war premium built in, and US dollar went for a run, equities went for a run, and it was just one-way traffic. That US dollar's been sold off now, and it's in that 102, 102.50 sort of handle. And there were talks that we're going to see 5 or 6 rate cuts by investors. But the Fed's got a different view, Sean. We saw that inflation actually went up in the Eurozone last week, and we've got the numbers coming out tomorrow in the US. How is that CPI going to look? And it seems to be a different viewpoint as far as the Fed and the investors. So have we got blast off in at March? Have we got blast off in April or May as far as a rate cut? We still sit here and go, I don't know, maybe not. So these all impact naturally dollar.
Dollar remains softer than one would have seen on the average last year. And thank you everybody for joining us in the India section, not the India section, maybe that's what we'll call it next year, the Asian section, and we'll move to the Middle East in half an hour. All the best. Thank you very much.
Thank you. Thanks, everybody.